This is not financial advice, not legal advice, for entertainment and educational purposes only. And anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. Listen, Citadel is in trouble. And all you got to do is look at their latest filing, and you see that Citadel is at risk of going bankrupt and taking down a majority of the market with them. Citadel is reporting $944 billion, almost $1 trillion in derivatives. Okay, and that's what they're reporting. We don't really know what's really going on. The number's probably a whole lot higher. But with $944 trillion in derivatives, they only have 411 million cash on hand. Okay, 411 million with an M, but they have 944 trillion in derivatives. And you guys know majority of this stuff is naked derivatives, things that are not backed by anything, that once the market starts to crumble and they get called in on those derivatives, there's going to be a major global collapse. And this situation gets even worse when you look at the kind of derivatives this is. Only 21 billion of this 944 billion in derivatives is on exchange derivatives, like calls and puts and things like that that we can see. 923 billion of those derivatives are over-the-counter transactions. More than likely, these are a whole bunch of swaps involving AMC, GME, and a whole lot of other stocks. These are private derivatives that we can't even see what they are. So they're probably credit default swaps that have absolutely no value whatsoever. And I don't see how Citadel gets out of this without destroying themselves. Okay? Because whoever they're holding those credit swaps for, when the situation starts to get out of control, they're going to call them in. And another thing too, derivatives on the lit exchanges, that 21 billion, that's easier to liquidate when you're having financial issues. But the 923 billion, that's off exchange, that's OTC, that's private contracts, private derivatives. Do you know how long it would take to liquidate those things? And to liquidate them for cash, they would have to have value in the first place. I don't believe they have any value whatsoever. I believe they were put in place to naked short a whole lot of stocks. And the chickens are coming home to roost. This is why Citadel is in court fighting with me, not to turn over the trading history, not to turn over the blue sheets, because I believe the trading history in the blue sheet is going to show that a lot of these 923 billion in derivatives is credit swaps used to naked short AMC, GME, and a whole lot of other companies. And there's no collateral supporting them whatsoever. Can you imagine having almost $1 trillion in derivatives? Over 90% of it in the dark, off exchange. And you only have 411 million in capital. Those numbers tell me somebody who's severely overleveraged, and any little hiccup is going to send them crashing to the ground. And the fact that they had to sell bonds to pay investors, the fact that they were selling part of the company, the fact they had to take out loans, tells me that Citadel is in deep, deep trouble. And sooner or later, the whole world is gonna see exactly what Citadel is. And hopefully the NWBO lawsuit starts exposing that. Okay? That's what I'm hoping. Anyway, please leave some comments. Tell me what you think. Do you think Citadel is in trouble where $923 billion of their derivatives is off exchange in the dark somewhere with some ghost partner that they made these deals with? Anyway, have a great day. God bless. I appreciate y'all on this journey with me.